Look, they start. Refer to info in B. Now, because they say you need to use info in B, you can't just name anything random. They say 2 items that were incorrectly recorded in the cash budget. So if I look at this cash budget, the ones that can't be in the cash budget is discount received, that one, and bad debts and depreciation. So any 2 of those 3 you can't show in the cash budget. Next, 2 items in the cash budget that would not appear in the projected income statement. So let's quickly look. Obviously, the cash from debtors and the payments to creditors. Okay, so there's four marks in the bag. Complete the debtors collection schedule for December. So, let's go. December, here we go. And they already put in most of the stuff. I just literally have to do the schedule. So I say 0, 1, 2, 3. 40% in the month, less 5 discount. 50 follow, 8 follow. So let's start. September is 0. October is 1. November is 2. And it's done. Nothing in December. October is 0. November 1. December is 2, which is 8%. So 640 times 8% gives me? Anybody? Like that. November is 0. December is 1. So it's 50%. So it's half of that, which would be? Now December is 0. Nothing in November because we don't pay before we buy. So now I say times 40% times 95%. And that gives me? And then I total, and that gives me?
6350.
Like that. 636350, that's what you read.
No, December should be 350.
350, not 250.
Yes.
Okay. And I've got, is that
636090.
636.
090.
Okay. Okay, let's. How many times have I said okay today already?
Okay.
Okay, let's do the next one, okay? Checkers. Let's do checkers. Yes, baby? Okay, so now they say we have to calculate the missing figures. Am I right? If I can just find my questions. Refer to information A and B, calculate the amounts. Okay, so A and B, here we go. So, discount allowed in November. So they have to give me information. Discount allowed is what I allow the debtors when they pay. Right? So, November is month 0. You agree with me? So I look at what was, if I look at my thingamajig here, November the credit sales was 651,000. In month 0, how much percentage pays me? 40%. And the discount is 5%. So what's the discount?
32,020.
Yes.
Where do you see the 651?
So the 651 I found here in the debtors collection. Yeah. Remember, so actually they're referring to that 95, that 5% discount. They want you now to calculate that.
So, ma'am, if you did by saying, by taking the 1085 in the projected statement and timing it by 60, is that
Did you
right?
get the answer? Yeah, ma'am, it's fine. Okay, next one. Interest on savings account. So where's my info? Interest on savings account. There's number 2. So, is there any other information for me?
Yes.
Okay, what? Please help me here. F. But they said I must use A and B. They said nothing about F. Okay, let's use F. The savings account will be increased by 84,000 on 1st December. Interest is 4% per year and not capitalized. So not capitalized just means it's not added to the savings account. It's going to your current account and you can use it. Does that make sense? Let me just explain. So here's your savings account and here's your bank account. So when I make a saving, I'm going to take money out of the bank, put it into the saving. You see? Now, if I earn interest, there's one of two things. The interest, let's say I earn 10 Rand. If I capitalize it, I will add it to the savings so that I start earning interest on that as well. I'm not taking it. But if I don't capitalize it, it means it goes to bank. So now I can use it. So that's the difference. And it's the same with the fixed deposit and the loan as well, when they use the terms capitalizing, reinvesting, not capitalizing. Okay, so now let's have a look. They say we have an extra 84,000. So I'm going to calculate the 84,000, 4% for 1 month, and that gives me how much? 280. And I have to remember this is extra. So I'm also going to earn the interest from last month, which is 1,002. And that's how I get 1,480. Another way you can do it is you can literally go and use the, you could have done it like this also, where you say the savings account times 4% for 1 month gives me 1,002. Meaning X would be 1,002 times 100 over 4 times 12 over 1. What do I get then?
360,000.
So it means I've got 360,000 in savings. Now I increase it with 84. So now my savings is 444 times 4%, 1 month, then I should get 1,480 as well. But this is a long way to do it. Okay, is everybody sharp? You guys have to talk.
Yes.
Okay, that didn't sound practiced at all. Here we go, payments to creditors. So I'm going to look at, so can you see here, they say refer to info in A and B. It's just because this appears in A and B. But we still have to use this info as well because it's additional. It's a little confusing. So let's look. What do they say about creditors? They say markup 75. Stock is replaced in the month of sale. The base stock is maintained, meaning purchases is equal to cost of sales. I'm saying again, I'm doing the grade 11s every lesson I record, and I do put it on your playlist as well. Go listen if you are feeling like you can't remember what we did last year. Okay. Now, all purchases are on credit, so it's 100% on credit. If they said 60% were on credit, it means 40% were cash. Creditors are paid in full 2 months after the purchase. So in other words, I also work with 0, 1, 2. I pay in 2. Which month do I need to calculate? Month December, meaning November was 1. Am I right? October was 0, so the transaction happened in October. Can you see how I'm working? So now I have nothing about how much I have cost of sales for November. If I had cost of sales for October, I could have used cost of sales. But they didn't give me cost of sales. Did they give me a markup? Yes, they did. So I'm going to start with October's sales. So I'm going to say 106,700 times 100 over 175, because now I have cost of sales. Then I times, no, I don't even have to time, because 100% is paid. So there's my answer. How much?
0.
So there's my answer. If they've said 60% were on credit, then I would say times 60%. If they say, oh, we get 2% discount, then you times 98 over 100. This can be a very large sum. Okay? Rent expense. You guys have to wake up, because it feels like you are tired and you are shut down. You're not taking in information anymore. And it's very important, this last part, because budgets in the exam counts between 30 and 40 marks. And it's an easy topic. It's not a difficult topic, because it's calculations. But you need to be awake, otherwise you're not going to get the calculations. Okay, rent expense. So what is the rent expense? There it is. So they say, rent expense are expected to increase by 13%. This is a very straightforward one, because I've got before plus the increase after. Before is 100, the increase is 13, so after is 113. What do they give me? They give me after. So that 31,640 is 113, and I'm looking for 100. And that gives me
28,000.
Everybody fine?
Yeah.
You sure?
Yeah.
Okay. Now, 341. In order to increase sales, Adam decided to change the way in which the salespeople are paid from November. The salespeople agreed to the change. What changes did he make? Now, let's go look. If I look, I see nothing here. If I look here, what do I see? There's salaries. Ne? Can you see the salaries? Is constant 72. What else is there? Oh, what page? Why do I have a page 9? Why don't I have an information? Oh, here it is. Okay, here we go. Thank you. Please listen. So now when I look here, did they say I must look at G? Okay. Refer to G. Okay. So the salespeople, can you see their salaries is less than budgeted, but they have now commission. Okay. So I always just want to make sure that I answer it in such a way that I get all the marks. So I'm going to say they no longer earn a fixed salary. They work for or on commission basis. Is commission 2 M's? Commission. There's 2 ticks. Yeah.
Please explain how I don't understand.
How I see it.
Yes, because even on the memo it says the same thing, but I'm not understanding how
I see it.
see that.
Okay, so let's look at this. Can you see they budgeted 165, right? So that's quite a lot of money. So they didn't fire people. They didn't say they said they changed the how they are being paid.
And when did they say that?
They say it there. They say, in order to increase sales, Adam decided to change the way in which the salespeople are paid. Okay, so now I look, I see, okay, so salaries is way down. So how did he pay them? And then I see in the next line, the commission, he didn't budget any commission. But look, there's a lot. So there's your change, there, you see. Can you see it now?
So then it means they won't be paid a certain amount, the same amount every month.
Yeah,
They'll be paid.
according to what they done. Which is, in one way, a very good incentive. Because the thing is, let's say Penyo and Mateo works at the same shop. Penyo works her butt off. She's there 6 o'clock in the morning, already cleaning the place, packing the stuff. Mateo's on his phone the whole time. He talks to nobody. He's busy with all kinds of other stuff. They get exactly the same pay. Right? Now, what happens with a commission basis? For every item you sell, you get commission. So the person working harder is paid better. You get what I'm saying? And the person not working is not basically piggybacking the backpicking, what do they say? Yeah, that one. Did I say it right the first time? Piggybacking on the one who's working. Okay. But it's also very stressful. A fixed salary, you know at least you're going to get it. Because say you get sick in the month and you're not at work for a week, then you earn nothing because you didn't sell anything. And in quiet months, your commission is going to be lower than in busy months. So you need to learn how to save when it's going well. Yeah, the percentage of commission can be very, very low. Yeah. So you need to have a lot of people buying. Okay. So now, let's go. Next question, they say, explain why some of the salespeople regretted their decision to agree to these changes. And now they say, quote, figures. Quote, figures. In the previous one, can you see they didn't say quote figures? Okay. And I also looked at the mark allocation. So now, if I quote figures, can you see if they were paid only a salary, they would have earned 165,000. Ne? But now, what do they earn? 161. Ne? So, let's see, how am I going to say it? The earnings with commission amounts to only 161,050. Can you see I added the salary and the commission? Whereas, is that right if I say that? Whereas, whereas, is it 2 words? Okay, whereas if they only earned a salary, it would have been, and then I don't have space, and then I do what Nissy does, and I go like this, 165. Nissy is so talking she doesn't even hear me. I don't mind if you guys write this, but please draw a line like this on every page and make sure that you do not write there. Okay? Because they're going to cut it. Okay? Everybody sharp with this? You all understand what's going on? Next one, they ask, Adam feels, and here we go into emotions again, and they say accounting is only numbers. Adam feels that the decision has benefited the company. I just want to say something. You do realize that even though that amount is less, it doesn't mean that the person who worked hard got less than he would have when he got a salary. Ne? This is most probably the guys who doesn't really work, who got less commission, and that made the total less. The individual did not necessarily do bad or worse. Okay, Adam feels that the decision has benefited the company, while the sales manager, Millie, is concerned that it did not benefit the company. So they want you to look at both ways. They want you to see the good and the bad. So now we have to see. Provide 1 point with figures or calculations to support each. So let's go look. What else happened? My sales. Can you see my credit sales increased? My total sales increased. My customers, did they give me customers? My customers oh, what did I do wrong? I said increased. Now lady, I can't say increased. Why not? Why can't I say increased? Because I haven't had those. That is not my clients. This is what I thought I were going to have. But then I actually had 640. So I think this one, when I have to answer, I'm going to look, this one is easier to copy than this one. There's only 3 figures in there. Here's 702. So less error margin. So I will say the actual clients of 640 is more than 480 budgeted. Please don't just write actual and then you say 640 budgeted 480. You guys love doing this, and it's horrid to mark. And in the June now, when I marked the June now, they didn't allow us to mark it. They say because they are basically just rewriting, and you have to comment in your own head because the comment is not there. Okay, so don't do that. Okay. Why would we be dissatisfied? So, by the way, I did mark this question, and they, with Adam, they didn't take the cash or the credit. You had to do the total. Okay, I don't know why. Okay, Millie. Let's quickly see. Millie is not happy. Why would Millie not be happy?
When people are earning less money.
No.
Oh,
Remember, it's not about their pay. This is about for the company. She thinks it's not good for the company. It's not about she's thinking it's not good for the workers. Be careful. It's not good for the company. Why? What happened there? The cash sales is lower. And if a business has to choose between cash and credit sales, which one is preferable? Cash. So there is already a problem. Ne? Okay. I don't know why, but in any case, here we go. The actual cash sales of 3,418,800 is less than budgeted for 34,000. You guys are talking the whole time. Okay, let me just make sure that that is the answer. So they say there, Millie. Credit sales is above budget, ne? Lower cash sales less. So she's not happy because the credit sales is more than budget. And the cash sales is less than budget. I also remember this, we were only allowed to give one tick if they did the delivery expense. Because the delivery expense is actually linked to the sales. So that also went down. Okay. They say here, delivery expenses are not relevant to the decision on commission. Okay. I'm saying again, I think the people who set up these papers are way more clever than me. And sometimes they see stuff that I would not have seen. How have you answered it? When you answered it, did you see this? No. Okay, but next time you will, ne? But next time they'll ask you something else. That is why it does not help to waste your time thinking, what is this, what is this? Leave it and go. Next one. Adam is concerned about the escalating rent expense and plans to purchase property. So now, always remember, when we rent, ne, that is my expense. But when I buy, I have to pay my loan and interest on loan. Ne? I have to do maintenance. I have to take out insurance. I have to pay property tax. And then, no, but here you also pay water and electricity. So most of the times when you rent, you actually pay water and electricity. Because these days they must install those prepaid things. So now that you want to compare, when you do it in actual life, you want to see, is your rent at this stage more or less than what you are now going to pay to own the building? That's the one part. So you want to see for your cash flow. But on the other part, you also want to see, why is it better to own your own building? Oh, now I have more assets. So I have a stronger base. Ne? It belongs to me. I can later on sell it at a profit. Okay? If I want to paint the building purple, I can. It's your building. A lot of companies rather rent than buy. Who can think why other naledi. Why would a company rather rent than buy maybe? What is good for them in it? Except that they don't have to do the maintenance and all of that.
Less liability.
Yeah, less liability with the loan, but that's not the main reason. Quickly go to the income statement. Go to the bottom of the income statement. What do we have to pay? Tax. And what does rent expense do? It makes my net profit before tax less. So it makes your tax payable less. Does that make sense to you? If you think about rent expense, it's an expense. So if I don't have rent expense, compared to when I do have rent expense, can you see what's going to happen to your net profit? You see? So rent expense makes your net profit less. You also save on interest on loan. Can you see? But so this is what we call tax avoidance. It's not evasion, it's legal. And also all the wonderful things. I don't have to do maintenance. I don't have to pay insurance on it. I don't have to pay property tax. So it's a lot of savings also. So let's go. Adam is concerned about the escalating rent expense. Calculate the net effect of this purchase on the receipts and payments. Now, let's quickly think. What is the net effect? If I go look here, that would be H. Receipts and payments, is it for that specific month? Okay, so let's go. The cost of the property, so let's say receipts and payments. So the payments is 2.5. But we're not going to pay 2.5 directly, no? Yes, we are. We are, because we get the loan, so the loan would be a receipt for me, no? Does that make sense to you? Okay. The fixed deposit matures, so that's 1 million. So part of that 2.5 will be the 1 million that I pay, that I receive, I will pay for there. A new loan, 1.5. Can you see now? It cancels out. So in other words, I buy the new property with part of the fixed deposit that matured and a loan that I made. Okay? Interest on loan, that's a payment. Monthly maintenance, that's a payment. So basically I get here 2.5 million and I'm going to subtract this. What is it? If I add those two, it's 31. Anybody, quickly add here. This is 31,250. Add it to the 2.5, so it would be 1, 2, 3. No, it's 250. Anybody, can you please help me here? No, there. Don't worry, I already did it. Can you guys just subtract those two? Then you're going to see, basically it's going to be that 31,250 is my net outflow of cash. It's my payments. Because if you look at it, your fixed deposit and loan equals the cost of the building. So the only extra outflow is the rates and taxes and the water and electricity, the 31,250. And that's a full 5 marks. Do you understand it? It's like I'm teaching zombies. No. Yes. Give one reason why Adam has decided to go ahead with this purchase. And here we mark literally anything. So it would be what? He gains an asset. He gains asset.
Possible income.
possible income through rent. You can rent out. It increases in value. You can sell it at a higher price later on.
Then if they ask for the net return in general, why do you not subtract or shouldn't you also subtract the rent you're paying before we bought?
No, because we're no longer paying that rent. They want to know, I now no longer pay the rent. This is now the situation. Why would you want to put the rent?
I mean, if let's say you're paying 6,000 for now you're paying.
So what you want to do, how much is the rent? Did they give you the rent? Because I don't see rent here. There's no. So basically, if I go maybe rent expense there, if you see there, because what he wants to do is he wants to take that 31,640. Can you see in effect that is already more than what I'm going to pay now monthly? But are you going to see that in December, in January, I will pay more than what the rent was? Because now I'm going to start paying interest on the loan as well. Is that what you wanted to do? When you do that, let me tell you, when we marked this, so if you show that part, you'll get your 5 marks. And then you show the 31250 minus the 31, then you say, this is how much I pay less. And then you just wasted your time because they won't mark it. But maybe in the next paper they want it. I think they would have asked there, the net, what is the difference, what we used to pay and what we are now paying. I think this one clearly states it's just about the new property. Okay. But I can